Hi, I'm Doug YYZ. I make Canadian personal finance videos and review videos here on YouTube. Today, I have 3 stock picks to share with you. These are all Canadian real estate investment trusts, or REITs. REITs don't pay dividends, they pay distributions, which sound awfully similar, but there is a key difference. Dividends get taxed at a preferential tax rate. Depending on where you live, based on which province, you're going to be paying less than you would on regular income because dividend income is just taxed at a preferable rate. Distributions, though, from real estate investment trusts, not a dividend, so you don't get that preferential rate, which is why you'll want to put it in a tax-free savings account or your RRSP. I keep mine in my TFSA. Usually, the distribution of a REIT is very high yield. Right now, it's easy to find ones that are 6% to 9%. The other benefit is they pay out monthly, so it's kind of that instant gratification. This past month, for example, in January, my dividends and distributions combined was just over $150, which is not that much money, but as an armchair new investor, it makes me excited. And just to point out, that is tax-free passive income. These companies don't see a lot of growth, but that's not really the strategy. Normally, the plan for REITs is to just keep those monthly distributions consistent. They do fluctuate with the market, and recently there was quite a downturn. About 2 years ago from now, things were closing up, either permanently or temporary, and those tenants then weren't paying their rent. Some of them weren't paying their rent, which meant that those distributions, some of them were cut down. The companies that I pick have properties where I'm confident that the rent is going to keep coming in. For example, any company that rents to a government department or agency is a safe bet because we know the government is going to pay their bills. Another safe bet is successful companies that are lockdown proof, meaning they provide an essential service, something like Walmart or Dollarama, for example. Similarly, medical buildings right now are another one that's a safe bet for obvious reasons. You've got dentist office, labs, doctor's offices, and just small medical clinics. So let's get into the 3 picks. The first one, of course, I've talked about this one in other videos. It's one of my favorite. It's SmartCentres. Some of their biggest tenants are Walmart, Best Buy, Winners, Rexall, Bulk Barn, Sobeys, Old Navy, PetSmart, Home Depot, and so many more. These are all familiar names to any Canadian. Everybody shops at these places, and a lot of them have been open throughout the whole, last 2 years that we've been going through. Right now, the yield with SmartCentres is around 6%, and this REIT makes up 11% of my whole stock portfolio. The next one that I found recently is called Innovas, and the yield right now is 8.4%. That seems very high. It's a Canadian REIT, but the properties that they own are over in France and Germany. I don't know too much about the real estate market over there. I do know that in France, they're a little bit more reluctant to shift to the work from home model, which we're doing a lot in North America. So that means that people are still going to their offices and that physical workspace is still needed. Innovas has a lot of office properties. Some of them are right in the middle of Paris, and if you know anything about Paris, very expensive, including the rent. So having a building in the middle of Paris, I think, is a pretty safe way to keep having those distributions coming in. If you want to see all of their offices or all of their properties for any of these REITs that I'm sharing with you, look in the description. I'm going to have links to all of them, and it's just a simple Google away if you're looking at other REITs to look at where their properties are and who their current tenants are and how much space they have in square feet and how much space of that is rented. All the information is there on their shareholders page. My third pick is True North Real Estate Investment Trust. The current yield with that one is 8.22%. The tenants are varied, but it's a lot of government occupied buildings, federally, provincially, and like I said before, we know that they're going to keep paying their bills. The other tenants are big companies like TD Insurance, Intact Insurance, and Smucker's Food Canada, just to name a few. There's a lot more than just that. So I'll have the link to those properties in the description as well. This one seems very safe to me. The only risk that I see is, especially with these insurance companies, them offering more work from home options. So they'll need less office space, and that means we're going to have a bunch of empty units in the properties that True North owns. One last thing though about working from home. There's been recent announcements of treating this thing more like the flu, which means things are opening up. We just had a bunch of restaurants and everything open up in Ontario and in Quebec. So I think we're moving in the right direction, which means people are going to head back to the offices. And maybe now it's going to be a split model where 3 days you work in the office, 2 days you work at home. So we'll have to see what these companies decide, but I don't think that this office space is going to go away anytime soon. I think they still are going to hold on to it and continue to use it, at least for a few days a week. The other thing I want to point out is with all these risks that I've mentioned, real estate investment trusts are actively managed And if they notice that one of their properties is losing money because they can't rent out their units, they're going to sell it. And with profit they've made from that, they're going to look for other areas that are up and coming and that will have tenants, and they will buy a building there, or they'll just find some way that they can keep those distributions consistent, because that's the goal. I hope these picks help you out with establishing your strategy for some passive monthly income. I'll keep you updated how it's been going for me and if I find any other good picks like this. If you haven't started investing yet, or if you're looking for a new investing platform that doesn't charge you anything to do trades, WealthSimple Trade is what I use, and I have a link in the description. If you sign up using my link, we'll both get a free stock. It's random what stock we'll get, so maybe we'll get Shopify, or maybe we'll get one of these picks that I mentioned today. Thanks for watching, liking, subscribing, and I'll see you guys in the next video. Bye.